Joining me now is Corey Kantanga, Head of Economics for the Americas at LinkedIn. Corey, thanks so much for joining us.
Thanks for having me.
So, Corey, the U.S. economy added 73,000 jobs in the month of July. That was well below estimates of around 100,000. And then prior months were also revised lower. So, put these numbers into perspective for us. What do they say about the current state of the labor market?
Well, if you've ever been to Chicago and taken the L to the airport, you know there's a section of the L where it feels like the train's going to fall off the track. It never does because everyone keeps going to the airport, but that's what today's jobs report is going to feel like for some folks. It feels like the labor market is wobbling. In part because of those major revisions we saw for May and June, about half of those came from a decrease in government payroll. So we thought government payroll was much higher than what it was, and that's always been the Achilles heel of the labor market since about January 2023. Because over 80% of the roles that have been added are coming from three places. They're coming from government, healthcare, leisure, and hospitality. So any collapse in government hiring is certainly going to impact the labor market at this moment. But what we do see is that, like those tracks, we know we're not going to fall off the rails. Unemployment is still 4.2%. It only ticked up a bit. It's still holding pretty steady. So a lot of people are employed. We've seen initial claims come down. We've seen continuing claims remains pretty steady. And overall, we have seen the labor market be pretty steady this year in LinkedIn's data. Up until about June, we did see the LinkedIn hiring rate remain, it bounced around, but it was about where it was in January. So overall, we have seen steadiness in the labor market so far this year, but this jobs report is certainly going to give folks pause. But given that the unemployment rate is 4.2%, I think it's an indication that overall the labor market is still holding up. We just shouldn't expect much more job growth going forward.
So, would you classify it as that we're starting to see cracks in the labor market, or is this just more of a return to normal after a period of strength? And to your point about unemployment rate being at 4.2%, what would a truly weak economy look like in terms of that number?
So we would probably see unemployment above about 4.5% or rising above 4%, approaching 5% in a much weaker labor market. But the labor market has been fragile for years now. It's been since about January 2023, 80% of those jobs are coming from just three sectors in the economy. Professional services, which has been an engine of job growth in the US, particularly in that in that post-pandemic recovery, has basically added no jobs and in fact even lost jobs so far this year. So we just aren't seeing any momentum outside of healthcare, government, and leisure and hospitality, which has been increasingly volatile as well in terms of the number of jobs that they're adding. So the labor market has been fragile just because it's really depending on a few sectors and increasingly maybe one or two. So we're not seeing a labor market that's in a position of strength. It is just holding steady. And so any things that could happen, maybe it's that we don't get a reduction in interest rates and we're expecting to get them, or maybe fiscal policy isn't as supportive as we thought it was, that can substantially weaken the labor market.
Well, speaking of interest rates, do you think that this report adds fuel for the Fed to cut rates sooner versus later now?
It's certainly going to be fuel to support the argument for those who are on the FOMC who want to cut rates. There is going to be some cover for the Fed in the sense that they do have a few more reports before they have to make a decision in September. So if we do see a stronger jobs report or we see a stronger than expected inflation report, which I really think is what the Fed's heavily indexing on right now. They want to see how is this pass through of tariffs to inflation going to affect the economy. So that's really what they're looking for. And as long as they don't see unemployment spiking, I don't think the Fed's going to be too inclined to move aggressively to support the labor market.
How much of the softness do you think is actually linked to trade uncertainty? Are companies just kind of in wait and see mode? And now that we have a bit more clarity on that front, albeit higher rates for some countries in terms of tariffs, could that change then and could we see a rebound?
A lot of the weakness in the labor market, it really does boil back down to interest rates. The labor market started slowing down as soon as interest rates rose in spring of 2022, and it's been slowing ever since. It hasn't been slowing as rapidly over the last year, but that was really the initial shock and cause of the slowdown in the labor market. And even for manufacturing, for example, we still see hiring in manufacturing slowing, even while other industries that were dramatically affected by interest rates like technology, finance, media, they've started to level out. So interest rates are really what's putting the clamp down on the labor market.
So if we do see the Fed eventually cut rates, maybe in September or even in December, what impact would we then see on the labor market from those rate cuts?
I think it'll be a while before we actually see any impact. When interest rates started going up, hiring was still running at a pretty strong pace. So if interest rates didn't tank the labor market immediately, they're not going to save it immediately. It's going to take some time for those interest rate cuts to work their way through the economy. And so even if the Fed cuts rates in September, even if they did it aggressively, I would still expect to see some slowdown in the labor market in the second half of this year, just given the level of uncertainty.
Is a recession in your forecast, Corey? How much of a slowdown?
So definitely a slowdown is expected in the second half of the year, but not a recession. At the moment, when you look at different projections for how the US economy is going to perform, we're still expected to grow above 1% year over year this year. And if we were in a recession, we would expect that to be contracting. So there's definitely some slowdown that is expected, and we've kind of been surprised that it hasn't manifested already in some sense, in part because the level of uncertainty that we're facing is quite elevated. The level of tariffs that we're facing are the highest since World War II, but the US economy's still been resilient. I expect some of that resilience to persist through the year, and though we will see some slowdown, I don't expect to see a recession.
Okay. I'm curious about how the government data, the jobs report, compares to what you're actually seeing on LinkedIn. Are the trends lining up, if you will?
So we do evaluate our data against government data, and generally we do see similar trends. So for example, we saw a significant drop off in hiring from June to July, about 6%, and that's somewhat reflected in what we've seen in the jobs report today, that there was some slowdown in hiring compared to the prior quarter. More significantly, what I have seen that wasn't aligned very well that's actually come into alignment is government. Government hiring on LinkedIn is the second slowest industry that we've seen this year, only slowest next to wholesale. So we haven't seen any momentum in government hiring this year. It's been slowing, but government was continuing to add jobs. And just last month, we saw a big spike in the number of jobs added from state government coming in part from education. And so with those major revisions that we saw, that definitely brings into alignment what we've been saying, that government hiring has actually been quite slow.
What are some of the top skills that companies are seeking out right now? And where does AI play into that?
Well, AI is pretty much the top skill across the board, not just building and maintaining the tools, but also being able to interact with them and evaluate their outputs. And when you think about building and maintaining the tools and you look at that labor market is hot. So everywhere else in the economy, things are kind of slower. They're really robust in healthcare, but AI, compared to overall hiring, there's like a 30% bump in the pace of hiring that we're seeing there. So it's a really hot job market. Employers, when we ask them what skills they're looking for, they do say that they are looking for folks who have AI skills and can interact and evaluate AI, and they're more likely to hire someone with that set of skills who has the identical skills otherwise than someone who doesn't have AI.
And what's going on with remote work? Because we're hearing so many companies bringing their workers back to the office. Are there still remote jobs out there, or are those few and far in between?
Certainly, there's still remote jobs out there. There's hybrid jobs. Hybrid has actually become the dominant model for flexibility right now in the US. So about 12% of job postings on LinkedIn are hybrid, about 8% are remote. So those opportunities are still out there and candidates are hungry for them. So we see about only like 20% of the jobs remote and hybrid, but 60% of the applications are going to remote and hybrid. So about 40% of those remote, 20% hybrid. So people do still want that flexibility. That demand is there. There are obviously areas where the labor market is tighter than others. So for example, the AI labor market. So their candidates do have leverage to demand flexibility.
Okay, just finally, for someone who's looking for a job right now, what's your number one piece of advice for them at this point?
My number one piece of advice, understand where the market is, know where the jobs are. If you are looking in an industry that where the jobs aren't necessarily great, so you take, for example, even though tech hiring is steady, it's still really slow. It's the slowest we've seen in our data. So if you're looking for a job in technology, maybe now is not the right time to jump into technology. So where is hiring happening and where the skills are actually overlapping? So for example, in healthcare, healthcare does hire software engineers. They do hire folks with these technical backgrounds that you primarily see in tech. So understanding that these industries are hiring, looking for roles, targeting those roles more specifically is going to be important because it is a very competitive labor market for job seekers.
And just building on that a bit more, if I'm brand new to the labor market or thinking about what industry should I go into, or maybe I'm looking to change jobs altogether, what are some of those other industries that are hiring right now?
So as I mentioned, we do see a little bit more stability in technology. So it's not to say there aren't opportunities there. There are. We've also seen a bit of a recovery in financial services, which is a popular area for younger workers to go into. But over the last few years, we've seen that there's actually been a lot of momentum in some non-traditional industries you think about when you think of people who graduate with bachelor's degrees. So, for example, oil, gas, and mining, energy, construction. Those seem to be areas that have actually hired a lot of recent new grads in the last few years, as we've also seen new grads migrating to the Sun Belt in places like Texas, where these industries are very prominent. So there are opportunities in areas that folks may not have traditionally considered. So knowing where those areas are, for example, doing the research, looking at LinkedIn's Grad's Guide, looking up those areas, super critical right now to find a role. And also knowing what skills employers are looking for. We see a lot of employers saying that they want AI skills. A lot of workers who are currently on the job, they don't necessarily have those skills. And employers aren't actually investing a ton in training them up. So if you can come in with some of those skills to actually help employers shape what they want to do with AI, because a lot of them actually don't know what they want to do, then that could be a big advantage for you in the labor market.
Okay, really important insights. Corey Kentanga, head of economics for the Americas at LinkedIn. Thank you so much.
Thank you.